Good afternoon, everyone. Welcome to the Investor's Source, your source of all wealth and wisdom. Great to have Casey Gregersen with us here today. Casey is a big-time investor up in Wyoming, primarily, I believe.
Correct.
And we've worked with Casey on a project up in Wyoming, I believe in Cheyenne or somewhere up there in the past, did a good deal, and hoping we can do more deals together as time goes on. So welcome, Casey, and wondering if you could tell everyone, give us a little bit of your background in investing and how you got interested in real estate investing, and particularly in the multifamily space.
Yeah, you bet. So yeah, I mean, I started in 2010 when I was actually going to school in Laramie at the University of Wyoming. Bought my first rental property, and then then actually my degree's in petroleum engineering from Wyoming, and then I took a job with Shell in 2012. So I just kind of kept that house and kept it going, kept tenants in there. My brother helped me out when I first moved. When I first moved, he moved in, so that made the transition easy. And then eventually he moved out, and I kept managing it from Houston, actually. And then, I was working a rotation in the field for Shell and oil and gas. So I had 2 weeks on the rig and then 2 weeks off. And that allowed me to all the time to start investing in real estate and building up my portfolio. So we just kind of started with single family houses, kind of moved up to some duplexes. Kind of the early projects we did is we would just buy a house. Like the second one I did in Laramie was we bought a house that had a basement that had its own access. And we just went and finished a basement, converted it to a duplex, increased the cash flow and the value. And those were kind of some of our early on projects. And as we've kind of grown, now we started to get into the multifamily space, which has been very competitive, but because we go direct to seller and we do a lot of marketing, now we just through our marketing, we have a lot of deals pop up in front of us that are multifamily. And obviously then we can we love multifamily because then we start to get all those we're able to scale and all those efficiencies of scale.
Nice. So it sounds like you're transitioning to be primarily focused on multifamily. It sounds like it's working out well. So continue telling us why multifamily is attractive to you, and then also maybe tell us some of the challenges you're facing in that realm as well.
You bet. So we still like both single family and multifamily. We'll still as far as our marketing, we're going to cast a net that covers both of them. As far as when I look at our avatar, our target audience, we're going to go toward anybody who's got equity or anybody who's in distress. We're going to market toward them. I obviously love multifamily for a lot of the same reasons that everybody else does. It's the fact that we can, when I'm raising capital, I can go raise capital from multiple people and kind of raise it all at once versus trying to piecemeal it into a bunch of single family houses. The maintenance and the kind of the management of it is one of the biggest savings. I'm very excited on this one we're under contract with. It's 63 units, but I can actually have a dedicated on-site maintenance guy. So that's going to be a game changer versus on the single family space. We've tried to aggregate a lot of rentals in one place and then have kind of our own in-house construction team or a dedicated handyman. But you don't get that efficiency that one guy who knows the property. I mean, and that's one right there is that really we're seeing as we're looking at this bigger acquisition is we're just talking to the contractor about going through each unit and knowing that they're just little copy and paste. So when he goes to do maintenance, he can have a lot of the same parts. He can if he's got to go in and change out, say we got a leak in the bathroom, he knows every bathroom is set up the same. So he knows where to go look for it. So especially when you're flipping and remodeling, you've always got all these unknowns. Well, you finally start to get some more knowns when it comes to a multifamily because they're all set up the same.
Wow. So you talk about scaling up and efficiencies of scale. It sounds like you've really kind of latched onto that, and it's paying big dividends for you. I can see that just being able to repeat, as you say, and move on to the next unit, many of the things being the same, just a very efficient way to go. Yeah. That's awesome.
And the other piece is probably just evaluating them, right? When you're looking at single family houses, a lot of these are one-off, and you're also at the mercy of the housing market and buyers and interest rates. I definitely, some of the perks of the multifamily is I know it's based on a cap rate. It's based on the income, things I can control. Like I can't always control on the single family what my neighbor's house sells for, what happens there, right? But on a multifamily level, I feel like I have a little more control on the expense. I control expenses. I can have some control on rents and at least be able to build a business plan around that versus kind of the maybe some of the volatility or maybe the up and down of like a retail market.
Right. Cool. I'm glad you brought that up because I wanted to kind of dive into that next with you. Just, talking about cap rates and valuations of multifamilies and apartment buildings. A lot of the real estate gurus have been very high on multifamily recently, and that seems to maybe be changing. And they've been high on it for many of the reasons that you've spoke about, but now there seem to be some dissenting opinions on whether multifamily is the way to go now, with so many economic factors, particularly rising interest rates causing rising cap rates, lower prices. Do you think this is a good time to get into multifamily? And what are you seeing out on the market as far as how multifamily units are selling and the values that are they holding their values, or what's happening with that?
Yeah, it's definitely so many variables, definitely very interesting. I guess what we're seeing is, man, I could go a lot of different ways. I got a lot of thoughts. One, I want to talk a little bit about creative finance is one way we're kind of looking at these. But if you're just simply looking at a traditional transaction, we're still finding, we're still just through our marketing. Again, this latest deal we found off market, and there's a great value add piece of this one. And that was one of the other things I was going to say about multifamily that I love is the value add component. Because if you go and for example, this property has 16 units that are currently vacant because they haven't been renovated. Right. And they're waiting on repairs. So we can go in and renovate those and fix them up. And as soon as we do that, that brings more rent and more income online, which just significantly increases the value of the property and also the cash flow. So I really like that piece of it. And so to answer your question, yes, there are still deals out there, and just like traditional deals to where, and I think it really depends on the market, right? We found in, like, for example, this one's in Casper, Wyoming, and there's places in Wyoming where cap rates are still, you could still buy a 10 cap or buy maybe 7, 8 cap versus you look in Colorado or you look places like here in Texas where people are buying it, these 3 caps, which just blows my mind. But I think if you go to the right market, we're still seeing good cap rates. And then the other piece is just distress, right? I talked to a lot of people here in Houston that are like in the commercial space, and they're just seeing that a lot of these people have these floating rate loans, and they're about to be in a big bind. And also insurance has gone way up, and taxes. Like that's another reason why I love Wyoming is like just there's a lot of those variables they're not as volatile, like taxes. I just got off a phone call a second ago. We were talking about, he's a Texas guy. He's been in a lot of funds in multifamily in Texas. He's like, man, what are insurance doing to you guys? And I was like, well, in Wyoming, we've seen a little bump, but not the crazy double or triple insurance rates that people have seen that literally wipe out your cash flow. And also taxes, like taxes are always going up in Texas. In Wyoming, they're still relatively low. I know Colorado's the same. So we're still, we're still seeing deals there, but we really haven't started to see a bunch of distress. I'll say that in Wyoming. And that's also a function of just the fact that it's a stable market. It's not up and down. And we didn't see a bunch of crazy appreciation. It's just been slow and steady. So we're mainly seeing a flat line, but I'm definitely excited over the next, say, 12 to 18 months to see some of these people that maybe did have a floating interest rate loan, and now they're no longer cash flowing and they've got to sell at a discount, because that's obviously what a big part of our company is geared around, being able to capitalize and buy when people, well, I hate saying it like that, but ultimately give people a way out, right? Because some of these people might not have a opportunity to get rid of an asset, right? But we'd love to step in, and we've got like the management in place. We've got the contractors in place to like take on something distressed and stabilize it.
Yeah, absolutely. So I'm hearing that prices at the moment seem somewhat stable, at least where you're investing. And even if they do drop or even plunged, to me, that's going to be challenging for those who already own those units. But for someone like you who is buying, it could present great buying opportunities, actually, because prices, if they go down, that's going to make it easier for you to buy at a good price. And I think it's sounding to me like that's what investors really need to be focusing on, is not getting out of the market, but looking for those good prices and, making money on the buy, as they say.
Yeah, absolutely. So with the way we're underwriting more carefully now, right? Because of higher interest, we have to, right? We have to underwrite based on a 7 to 8% interest rate. But I look at it as, if we can underwrite and make it work at those rates, then if interest rates come back in a couple of years, like we refinance, that's all basically gravy. So make it work at those numbers. And then the other piece I was going to mention is the creative finance. So we're approaching, like this last deal, we weren't able to quite make it work, but originally we were negotiating for where they had these 63 units they had a loan for $1.7 million approximately, and they were at 4.3%, which is great rate. So we were working with them to, hey, let's assume that, let's actually make a payment on your equity and give them a down payment, which would have been kind of similar to what they were going to get if we bought it outright anyway. The deal, it ended up not being the best situation for them, but we're doing a lot of deals like that where people do want to sell a multifamily and it doesn't pencil at 8%, but okay, well, let's work on how do we assume their loan and still make the numbers work, and still take down a great asset.
That's exciting. And I'm glad you brought up financing, which is near and dear to my heart, of course.
Absolutely. Mine
too.
I'm
wondering, I just wrote an article for this same newsletter where this interview is going to appear, just talking about actually using hard money for multifamily purchases. Can you tell us, continue? You've already started talking about some of the creative financing, and do you see a room for hard money at all in the purchase of multifamily properties?
Yeah, absolutely. To your point, I love finance too, right? So one of the fun things about talking to you is get into pick your brain, talk about finance, right? That's one of my favorite things. But anyway, I totally see on the financing side. So, right, especially in a multifamily that needs renovations, not every bank is going to want to fund it that way, or it all depends how you're really lining up your capital stack and how much equity and how much debt. And then ultimately, maybe even working in that middle ground, right? Sometimes you might be able to get a hard money lender. That's where I would use it, is say, hey, let's go to a bank, get the best financing we can, and then let's go see if we can borrow a little bit in the middle from a hard money guy who's still behind the bank, but still in a good position at a little higher interest rate. And then you got your equity on the top. So I totally see the need there. Also, just too, if you feel like maybe it's a distressed enough asset that the bank won't lend on it, but once you stabilize it, you can go to a bank and get financing. So in those situations, I still love using hard money.
Yeah, exactly. Just for the regular reasons, the normal reasons that people use hard money to, a big one being to get money for very distressed properties, to get them into a position where the bank will fund. Hard money lenders can step in and fill that initial purchase need and rehab need as well. Cool. What about multifamily for inexperienced investors or those who are gaining some experience? Would you recommend that they start that way, or how would they get into that space if they don't have a lot of experience, or should they?
Yeah, it's a great question. I mean, I don't think they should steer away from it. A lot of people's natural progression is, and it was mine as well, was from single family to duplexes, 4 units, and then kind of move up the way. That's a good way to maybe not take as much risk early on. But I've talked to a lot of people too that are just crushing it now because they started in multifamily and they got the right mentor and they participated in the right deals to where they learned it. So that, I mean, if somebody wants to get into it now, that would be my advice. And honestly, it might be me talking to myself 5 years ago, go start multifamily right away, but just participate in the deal, understand how to do it, how to underwrite it, how to manage it. And then the next deal, maybe you can go do it on your own, but 100% you could jump in. But I would not recommend taking down a large multifamily without help or any experience, because you're just magnifying a single family house. You're going to make mistakes. And I can tell you, because I've lived them, and we learned a lot of lessons the hard way on our single family flips, but those were a smaller scale and we could survive that. Messing that up on a large multi-million-dollar deal could be very problematic.
Big consequences, right?
Yeah.
I think
And
your advice there, which I think applies to a lot of things in life that you're trying and endeavoring, is to get help and get a mentor and work with someone who knows the ropes before you make those big mistakes.
absolutely.
And I think a lot
And
of
just
us
going to a lender, right? The lender, you're not going to, even if you probably got great financials, the lender is going to want to see your operational experience. So you want to build that as you kind of go up to that. So really, it's going to probably nearly be impossible to get lending on a size deal if it's your first one. But as you get experience, then you can demonstrate that to your lender. And again, I think it's just what I've done with our lenders is like start with small deals. They get more confident and then they kind of loosen up on you. They get to trust you. They start looking at more of you versus just the deal, and they can get creative and make deals that maybe don't pencil, maybe don't check all their boxes on their kind of standard underwriting. They start to give you a little more flexibility once they know you.
right. And that's what we look for, people who are have some experience behind them, but if they don't, they have a really good team behind them and a plan, they're organized. If all of those things are in place and the team is there, we'll look very seriously at funding a deal, even with someone who doesn't have a whole lot of experience. Casey, before we talk about, or I let you talk a little bit about how someone could invest in your 63 unit apartment, maybe just, do you have any final thoughts as we wrap up about words of wisdom for investing in multifamily and anything else that comes to mind for you right now?
No, I think we covered a lot of it. I think I would just, you know what, maybe the other thing is, other than the fact that, because we talked about, should you be sitting on the sidelines now or should be getting in? Like we talked about a lot of ways you can kind of mitigate some of the risk in the market now. And I think there's opportunities to come, but I still believe in a lot of the markets we're seeing, like market rents they're still below, and we're still seeing a lot of assets. I mean, that's probably one of the biggest ways that we're able to bring value or basically force appreciation on these multifamilies is we know what market rents are and they've raised a lot. And I really think there's more room for them to grow. I mean, there's definitely going to be a challenge in that, and it's going to be interesting to see what happens in our economy, but ultimately rents, there's just not enough. It's a supply and demand issue. And that's really why we invest in a lot of the markets we're in, where there's not enough supply, but there's still demand and jobs and people want to live there, but there's literally not enough places to live. So something has to give there. Their rents have to come up. And I think that just provides opportunity for investors in multifamily or single family, but definitely just being a real estate investor. I think it shows that if you can make your numbers work now at high interest rates, I think you've got things working in your favor, which are rents going up and hopefully rates are about to cap off and come back down.
Yeah, that's the thought that seems likely. Not too far down the road, rates might start coming down, which is great for investors. So I think you are positioned well. Thank you very much, and want to give you a little opportunity to talk about your newest venture, the 63 unit, and how people might get involved. And then we will put your information up on the screen so people can contact you directly.
You bet. Yeah. So as I kind of alluded to a couple different times, we're taking down this 63 unit apartment in Casper, Wyoming, and bringing on limited partners for our fund to participate in that. And we're also, in addition to that 63 unit, I'm also bringing in some stable assets from our current portfolio. These are properties we have in across Wyoming that we've got tenants in and are currently cash flowing, because we wanted to kind of bring a blend of like this big value add with the apartment, but also bring in some stable assets that are throwing off cash flow. That way to kind of keep it kind of a low risk type of fund with good returns. So yeah, we're definitely looking for limited partners. This is great for people who are, as I always say, people that don't necessarily have the time to invest in real estate. They don't have the time. We talked about it a lot today with, hey, what does it take to get into multifamily? Have a mentor, not make the mistakes. Well, the other way you could do it is you could participate in a deal as a limited partner. And yeah, again, you don't have to worry about the property management. You don't have to worry about finding the deal. You don't have to worry about managing all the contractors, which are all not so much fun stuff to do. But we've got a team that does it. And really what our fund is designed is to create people to where they can get an opportunity to invest in real estate as a limited partner, right? Because you could be a lender or you could be a limited partner, I would say. The advantage of being a partner is you get all the tax benefits. So as a limited partner, you get the same tax benefit. Not all the same ones as I do, because I'm an active real estate investor, but they would be passive. but there is still there with the depreciation, cost segregations. There's a lot of benefits to that. And just there's a lot of people excited to be investing in real estate at this point. And we just want to be able to give those people an opportunity who might not have time in their day job or in their daily life, whatever they got going on, but they can still participate in the deal.
Right. And capital gains versus regular income is a good thing as well. What's the minimum investment?
You bet. So our minimum is 100,000. We're actually, this first raise is going to be right around 2.5 million. Again, we've got a couple fixed assets, as I mentioned, that we're bringing into them. And yeah, I definitely, if people are interested, please reach out. I'd love to just hop on kind of a discovery call. We could get to know you. I really just want to get to know your, like what you're looking for as far as investing and what you're looking for as far as returns, because if our fund doesn't work, we've got other options. We're always partnering with people on flips. If they just want to be the bank and they want something a little bit like shorter term and maybe a little bit different rate, like there's always those opportunities. Also, we created a partnership with a guy here in Houston that I know from our neighborhood, where it was a great opportunity where he wanted to be an equity partner. He wanted to participate in our deals, and he had a little bit larger investment. So I'm always open to partnering with people too. But ultimately, I bring this up is like, let's have that call. Let's see what the best fit is. And if one of our options is for you, then great. If not, I'm always happy to make a referral or guide them. And I love talking real estate. So I'm always happy to get on a call.
Yeah, I think it's Casey's one of the shakers and movers up in Wyoming, and you will good way to get into investing is, as Casey said, if you don't have the time to do your own real estate investing, this is another way to get into the game. So, hey, thank you very much for joining us here today. I think that was very enlightening for our viewers, and much appreciated you being on with us. And
Absolutely.
good luck.
Thanks for having me, David.
Okay, Casey. Thank you.
I love talking about it.
Okay,
Thanks.
man. Bye-bye.